Good morning, I'm Maiki Oreta and you're watching Business 360, where we break down the numbers, connect the dots, and give you the developments and the insights you need to navigate, adapt, and lead. Let's dive right in. The Philippine economy could fall short of its 5.5 to 6.5% growth target for 2025 as weak spending and a deepening corruption scandal continue to drag on performance. The Bangko Sentral ng Pilipinas reports a stronger banking sector with non-performing loans dropping to 3.31% in September, the lowest level in 6 months. In the United States, the Senate is moving to end the 40-day government shutdown, passing a bill to fund operations through January 2026. Let's take a look at how global financial markets performed last Friday. U.S. stocks ended mixed as investors wrapped up a volatile week, weighed down by economic uncertainty, the record-long federal government shutdown, and by concerns over high-tech valuations that tempered risk appetite. The shutdown also caused a blackout of official economic data, making it harder for the Federal Reserve to balance its mandate of supporting jobs while keeping inflation in check.
It's really a continuation in terms of what's going on today. It's a continuation of the last several days where, despite having a great earnings season, earnings up 13% year over year, there's been some profit taking going on. We've had a big run since April. Tech is kind of getting hit the hardest. Earnings misses, typically only down 2% on average, or down 7% this earnings season. So what you're seeing today is just an extension of concern about big tech, AI, supercycle, and those tech names are leading the downside.
The Dow Jones Industrial Average higher by 0.2%, the S&P 500 higher by 0.1%, and the Nasdaq lower by 0.2%. Over in Europe, the markets there finished in the red. The UK's FTSE 100 down by 0.6%, Germany's DAX down by 0.7%, and France's CAC 40 down by 0.2%. The 4% growth in the third quarter was a sharp reality check. The Philippine economy just posted its slowest expansion in 4 years, and business leaders say that it's a warning that confidence and momentum are slipping fast. Confidence shaken by corruption scandals is now hitting the real economy, with consumers spending less and the government projects stalling. In a consumption-driven economy, MSMEs struggle with high costs and limited credit. Manufacturers face rising expenses and logistical bottlenecks, while agriculture needs stronger support to boost productivity and to ensure food security. Finance Secretary Ralph Recto remains optimistic, saying that the economy is poised for a strong comeback in 2026. He says that the administration's cleanup drive and focus on legitimate, high-impact projects will help rebuild trust and deliver more sustainable growth. Business leaders agree that the GDP slump is both a warning and an opening to rebuild momentum, revive local industries, and promote greater local sourcing. The message: the Philippines can still turn the corner, but only if confidence and credibility return first. Still on that GDP slowdown, this isn't about economic weakness, it's about governance paralysis. That's according to former Albay Congressman Joey Salceda, who warns the public is paying twice, first for the corruption and again for the inaction that follows. After investigations into flood control projects at the DPWH, many agencies have been operating in fear, leading to delays, suspensions, and decision paralysis. Data shows services grew 5.5%, agriculture 2.8%, and industry just 0.7%, with manufacturing at 1.2%. Private construction surged 14.4%, but government construction plunged 26.2%, dragging overall growth. Salceda says investigations must continue, but implementing agencies cannot freeze. He urges them to keep working within their mandates to avoid an economic standstill. He proposes 2 paths moving forward. First, establish clear anchors through project segregation, transparent timelines, and a safe harbor policy to protect honest officials. Second, redirect the 100 billion pesos in idle funds to disaster relief and aid programs to keep money moving. while infrastructure projects remain under review. Economists say that the biggest test now is balancing accountability with action before paralysis turns into prolonged stagnation. Now, the Philippines is unlikely to meet its 5.5 to 6.5% growth target for 2025, weighed down by slow public spending, natural calamities, and a widening corruption scandal. Analysts say that the weak performance isn't just a temporary dip, it's a warning that confidence and momentum are fading, and the government may need to revise its growth goal. The country's 9-month average GDP now stands at 5%, below last year's 5.9%. Economists are turning more cautious. Jonas Revelas of Reyes Tacandong and Company has cut his 2025 forecast from 5.7 to 5.3%. ING Bank's Dipali Bargava now expects just 4.7%, citing delays in public projects and weaker consumer spending. Miguel Chanco of Pantheon Macroeconomics called third quarter GDP ugly all around, warning that the anti-corruption drive is freezing infrastructure activity and costing jobs. The only bright spot, exports rebounded 2.4% quarter on quarter, helped by a weaker peso and recovering global demand. The Bangko Sentral ng Pilipinas still has room to cut rates, with the policy rate at 4.75%. Analysts expect a 25 basis point reduction in December and more in early 2026. This as inflation averages 1.7%, below the BSP's 2 to 4% target range. But easier monetary policy may not be enough to restore growth without stronger governance signals and faster budget execution. For now, the message from markets and economists alike is that the economy is losing steam and confidence is the first thing that needs to be rebuilt. Following warnings about governance paralysis, the administration is offering assurances of its own. Malacanang says that the country's 4% GDP growth in the third quarter is only a temporary hiccup, blaming slower government spending and ongoing corruption probes. The Department of Finance insists that the economy is poised for a strong comeback in 2026 as spending efficiencies and infrastructure budget reforms take full effect. Finance Secretary Ralph Recto acknowledges that the slowdown in disbursements is due to the flood control investigations. He says that this reflects the administration's commitment to good governance, funding only legitimate, high-impact projects. Recto adds that this short-term adjustment will pave the way for more efficient, transparent, and accountable public spending moving forward. The challenge now is how to rebuild confidence and momentum while keeping that cleanup drive at the heart of economic reform. Now, with the economy slowing to just 4% in the third quarter, the weakest in 4 years, pressure is mounting across every sector. After another powerful storm shuttered schools and government offices, the impact of nature and neglect is impossible to ignore. Deadly typhoons and earthquakes, amplified by massive corruption in public works, are shaking investor and traveler confidence, hurting industries that depend on stability and infrastructure, especially tourism and hospitality. The Philippine hotel industry is on the front lines, riding out this storm, literally and figuratively, trying to turn a weak peso and strong service brand into real arrivals and revenue. Joining us now is Benito Bong Bengzon Jr., the Executive Director of the Philippine Hotel Owners Association. He's here to talk about how the industry is coping and whether tourism can still help lift this economy. Hi, Bong. Thank you for being here with us.
Hi, Maiki. Thank you for having me in your program.
Yeah, Bong, it's going to be interesting to hear from you. You worked a lot with the DOT. You were a career DOT official before you joined the Philippine Hotel Owners Association. So let's start with this. Our economy grew by 4% in the third quarter. It's really sharp slowdown. How are you feeling this on the ground?
Well, even before the report on the GDP slowdown came out, the Philippine hotel industry was already facing a lot of challenges. Our numbers are still down compared to pre-pandemic levels. And the report of the slowdown in GDP will mean that the consumers will be holding back on spending. And that includes spending on travel and staying in hotels.
Yeah, that's what's cutting growth. Everybody holding back. Bong, as As many countries in Southeast Asia, most countries in Southeast Asia have recovered to pre-pandemic levels, back to 2019 levels, about 100%. Where is the Philippines now? The latest figures are 2024. Can you tell us about where we stand to put things into context?
Well, last year we had about 5.9 million foreign visitors. This is still a long way off from the 8.2 million that we recorded in 2019, no? Pre-pandemic. So in terms of recovery rate, we're at about 75%, thereabout. So we still have a long way to go. And it's very important to bear in mind that the hotels depend largely on inbound foreign visitors for revenue. So any slowdown in the movement of visitors from abroad will obviously have an effect on the bottom line.
Yeah. Our top visitors were the Koreans and the Chinese. Why have these visitors stopped coming as they used to come to the Philippines back in 2019?
Several factors, Mikey. One would be the Koreans, for example, have shifted to other destinations, particularly Vietnam. In the case of China, of course, we're all aware of the geopolitical factors that have affected the inflow of Chinese visitors. And perhaps to share some statistics, in 2019, we had about 1.8 million Chinese visitors coming to the Philippines. Last year, it was down to a little over 300,000. So it's a humongous gap that we have to close. And we welcome the decision to offer e-visas to the Chinese market. Hopefully, this will be supported by a sustained marketing and promotions push so that we can get a bigger share of the inbound market from China.
Yeah, we need that inbound market from China. Bong, how much of that loss, the loss of China's market, is because of the tensions in the West Philippine Sea, and how much of it is because of other things on our end, like slow ease of visa rollouts or more marketing, deeper marketing push?
Very difficult to attribute it to just one factor, Mikey. But obviously the difficulty in obtaining visas was a major factor. I think we also have to consider that overall there was a slowdown in outbound traffic from China, and there was also a shift, in terms of preferred destinations. Many of the countries in Southeast Asia were quick to pivot, to other source markets when they started to see that the Chinese market was slowing down.
Mm-hmm. Bong, I also wanted to ask you, the earthquakes, the typhoons, the natural disasters are, they're nothing new, and it's not just us that experiences these things. But what is unique to us seems to be the massive corruption in government. How deeply has this affected your sector?
Well, we're experiencing a perfect storm, Mikey, no pun intended. We have a series of natural disasters that have affected many of our popular tourist destinations. We have the corruption scandal, which has affected the image of the country. So all these developments certainly are not helping any. And this has put a lot of pressure on both the government and the private sector to work even more closely so that we can remain competitive and remain top of mind for overseas travelers.
Yeah, the private sector is the biggest stakeholder when it comes to investments in tourism, Bong. But do you think the government, do you think Malacanang is doing enough at this junction to help this sector recover to the pre-pandemic levels? We're so far off from the 2019 peak of about 8.2 million.
Well, we're seeing some positive developments. I mentioned earlier the e-visa for Chinese visitors. We started that just this month. In June of this year, we started issuing visa-free privileges to Indian travelers. Earlier this year, for the first time, the government finally will grant VAT refund for non-resident tourists. So these are positive developments, here and there that help increase the numbers. But as I mentioned, we are at about 6 million. Our all-time high was 8.2 million, and we still have a long way to go.
Yeah. Bong, lastly, what is your outlook for this sector as we head into 2026?
Well, we remain cautiously optimistic. I'm not about to throw in some numbers for 2026, but because obviously it's very difficult to come up with any numbers for next year if we don't have an indication of what the year-end figures for 2025 might be.
Okay, and what's the biggest hurdle that the government needs to tackle right now to help, increase those numbers for 2026?
Infrastructure, connectivity, and marketing. What we want to do, this has to be the priority. We have to be able to provide a seamless, convenient, hassle-free, enjoyable stay to our visitors.
Yeah, okay, everybody wants a good experience when they travel. All right, thank you so much, Bong Bengson.
Thank you, Maiki.
We're taking a quick break. Please stay with us as we dive deep into the numbers and the narratives that matter most to your bottom line. Welcome back. Let's take a look at how Asian markets are doing right now. The Nikkei 225 is in the green, up by 1.2%. Hong Kong's Hang Seng Index higher by 0.5%, and Shanghai's Composite in the red, down by 0.1%. Singapore's stock exchange trading to the downside. Straits Times Index lower by 0.6%. Now, taking a look at our market here at home, the Philippine stocks fell to multi-year lows Friday after the economy expanded just 4% in the third quarter, its slowest pace since 2021. PSE index slipped 1.3% to 57.59, its lowest level since September 2022, extending year-to-date losses to nearly 12%. Value turnover hit 14.2 billion pesos, however, boosted by heavy trading from the Maynilad IPO. Analysts say that the market's weakness reflects shockingly disappointing GDP data that deepened pessimism towards one of Asia's worst performing markets. The slowdown highlighted structural headwinds and corruption concerns weighing on investor confidence, and household consumption, which accounts for over 70% of output, as it dropped to a 4-year low. Consumer stocks like Mondenisin, Jollibee, and URC fell more than 4% each. Maynilad Water, the country's second largest IPO ever, closed just higher by 0.1%, now on that market debut. Now, taking a look at the main gauge, the PSE index is trading to the upside right now, in the green by 0.4% to 57.84. Broader All Shares Index is higher by 0.3% to 35.24. Taking a look at these sub-indices, they're all trading to the upside right now, led by the mining and oil counter, which is up starkly, up by 2.5%. Total volume, 125 million shares trading hands, valued at a hefty 2.15 billion pesos. Market breadth, almost neck and neck. We've got 62 advancers, actually neck and neck. 62 advancers, 62 decliners, and 60 stocks unchanged. On the currency front, the peso opened at 58.98 against the greenback, slightly stronger than its previous close of 59.04. After last week's sharp sell-off, investors are starting the week on a cautious note, still weighing the impact of weaker than expected economic growth. Philstock's Financial Assistant Research Manager Claire Alviar says that the market may see bouts of bargain hunting driven by foreign direct investment data and corporate earnings reports. She notes that investors are still digesting the 4% GDP growth in the third quarter while awaiting the FDI figures that could set the tone for trading. Alviar adds that a strong FDI print could lift sentiment, but a weaker number may deepen the market's bearish mood. For the week, analysts expect the PSEI to move sideways between 58.50 and 59.50 as traders look for new catalysts to break the slump. Now, the Bangko Sentral ng Pilipinas, or BSP, reports that bad loans in Philippine banks fell to a 6-month low in September. BSP says the non-performing loan ratio dropped to 3.31%, down from 3.5% in August. Economists say improved weather and stronger business activity helped households and companies catch up on payments. Soured loans rise slightly to 538 billion pesos, while total lending grew over 16 trillion pesos. Banks have also increased reserves to nearly 505 billion pesos, keeping strong buffers against defaults. We now have John Manalo on the line for an update on the typhoon. John, go ahead.
One maintains its strength as it continues to move west-northwest over the West Philippine Sea. The center of the eye of Typhoon Uwan was estimated based on all available data, including those from Benguet Doppler weather data, at 125 kilometers west-northwest of Bacnotan, La Union. It has maximum sustained winds of 150 kilometers per hour near the center and gustiness of about 185 kilometers per hour. It moves west-northwest at 20 kilometers per hour. Its radius extends up to 780 kilometers. So this Typhoon 1 is relatively very large in terms of its cloud bands and also the area with strong winds. And based on our last bulletin, which was released 8 a.m. this morning, signal number 4 is still raised over the western portion of Nueva Vizcaya, the western portion of Mountain Province, southern portion of Abra, western portion of Ifugao, Benguet, central and southern portion of Ilocos Sur, La Union, northern and western portions of Pangasinan, signal number 3 over western portion of Isabela, southern portion of Apayao, Kalinga, the rest of Ifugao, the rest of Abra, the rest of Mountain Province, the western portion of Quirino, the southwestern portion of Ilocos Norte, the rest of Ilocos Sur, the rest of Pangasinan, the rest of Nueva Vizcaya, northern portion of Nueva Ecija, the northern and central portion of Tarlac, and northern portion of Zambales. Signal number 2 over Cagayan, including Babuyan Islands, the rest of Isabela, the rest of Quirino, the rest of Apayao, the rest of Ilocos Norte, Aurora, the rest of Nueva Ecija, the rest of Tarlac, the rest of Zambales, Pampanga, Bulacan, Bataan, northern and central portion of Quezon, including Polillo Islands, Metro Manila, still signal number 2, including Rizal, Laguna, Cavite, Batangas, northern portion of Marinduque, northern portion of Oriental Mindoro, northern portion of Occidental Mindoro, including Lubang Islands, and the western portion of Camarines Norte. Signal number 1 over Batanes, northern portion of Palawan, including Calamian Island, Cuyo Islands, rest of Camarines Norte, Camarines Sur, Catanduanes, Albay, Sorsogon, western and central portions of Masbate, including Ticao and Burias Islands, Romblon, the rest of Oriental Mindoro and Occidental Mindoro, the rest of Quezon, and the rest of Marinduque. In Visayas, signal number 1 is still raised over the northwestern portion of Northern Samar, northern portion of Iloilo, Capiz, Aklan, and northern and central portion of Antique, including Kaluya Islands. Also, we would like to inform our viewers that yellow warning is still raised over Metro Manila, including Tarlac, Pampanga, Bataan, Bulacan, Nueva Ecija, Rizal, Cavite, Laguna, Batangas, and Quezon. And orange rainfall warning, which means floodings are still threatening over Zambales. And that will be our update from the DOST Pagasa.
Thank you for that update, John. Over in the United States, the Senate there is moving toward a vote to reopen the federal government now on its 40th day of shutdown. The impasse has already slowed the world's largest economy and is beginning to affect markets and trading partners worldwide, including the Philippines. Lawmakers plan to advance a funding bill that would keep the government running through January 2026, along with 3 full-year spending measures. Democrats are pushing for healthcare fixes, while a separate vote on subsidies under the Affordable Care Act, or Obamacare, is still being discussed. The shutdown has disrupted federal services, food aid, and air travel, threatening both Thanksgiving travel and U.S. economic growth. President Donald Trump has called for replacing Obamacare with subsidies with direct payments to individuals, but Treasury Secretary Scott Bessent says that proposal will have to wait until funding is restored. An extended shutdown could weigh on global growth and investor sentiment, putting pressure on emerging markets like the Philippines through weaker trade and currency volatility. And that's it for Business 360. I'm Maiki Oreta. Thank you for joining us, and keep it here on BNC, the Bilyonaryo News Channel.